Welcome back to the channel. In this video, we're going to take a look at the Riverside County housing market, where a fierce battle is unfolding between two opposing forces. On one side, a spike in mortgage rates from 3% to 7% in 2022 has made affordability a significant concern for buyers. This affordability challenge comes on the heels of a national home price surge of more than 40% during the pandemic boom years. And this is putting significant downward pressure on demand and could lead to a further slowdown in the housing market. On the other side, the scarcity of available homes for sale, compounded by the lock-in effect, is driving up prices and intensifying competition among buyers. With an extremely low level of inventory and homeowners reluctant to move, Riverside County is experiencing a bit of a unique situation. This scarcity of homes for sale has created a highly competitive situation where buyers are facing limited options and very intense bidding wars. So as we delve deeper into the Riverside County housing market, it's important to consider the implications of these ongoing battles. Will rising mortgage rates and affordability challenges continue to put downward pressure on prices, or will the scarcity of available homes and the heightened competition among buyers drive prices even higher? To answer these questions, we'll be exploring the trends, analyzing the data, and discussing what these patterns mean for both buyers and sellers in Riverside County. So get ready to learn some valuable insights, and don't forget to hit that subscribe button for more real estate updates. And as always, we'd love to hear your thoughts and questions in the comments section below. My name's Ty Youngblood. Let's get started. Over the past 2 weeks, the active listing inventory for Riverside County, which is the total number of available homes for sale, increased by just 5 homes, bringing the current inventory to 4,142 homes. It's the second lowest reading we've had for July since tracking began. The only other time that the inventory was lower at this time was in 2021. We'll likely see inventory continue a gradual rise over the summer until it reaches its peak sometime between now and the end of August. So what does this mean for you as a buyer or a seller? Well, the lack of available homes suggests that it's likely to be a market that favors sellers well into 2024. And to give some perspective on this, last year at this time, inventory stood at 5,794 homes, 40% more, or 1,652 more available homes. And the 3-year average before COVID, which we like to measure as 2017, 18, and 19, there were an average of 8,308 homes on the market, 4,166 more homes than we have today. And a contributing factor to this tight inventory is the lock-in effect, where homeowners are opting to stay put because they would rather stay in their homes than trade their 2 to 3 to 4% interest rate for a rate that's at 6.5 or 7%. In fact, the majority of homeowners in California have a low fixed rate mortgage. 89% of homeowners have a mortgage of lower than 5%. 71% have a mortgage that's lower than 4%, and almost 30% of homeowners still have a fixed rate mortgage lower than 3%. Given the current market conditions, it's safe to predict that this trend of homeowners holding on to their low fixed rate mortgages is going to continue at least until we see a decrease in interest rates. Now let's look at another interesting aspect of the real estate market, especially as we navigate through the summer market. Did you know that behind the scenes, the real estate landscape is undergoing a significant transformation? It might be surprising, but summer comes in as the second busiest time for real estate, trailing just behind the spring season. And although people have other activities on their summer agendas, they're still working towards their real estate goals. But this summer, things are a little bit different in the market, and I want to give you an understanding on what's going on. When we talk about demand in real estate, we're referring to the number of new escrows opened in a given month or a 30-day period. And in the past couple of weeks, we've seen a slight drop in this figure to 2,183, which is a decrease of 23 pending sales, or a dip of about 1%. Last year at this time, demand fell by 159 pending sales, or 6%. And that's because mortgage rate volatility is far less than it was last year. Last year at this time, rates were going up significantly. Demand was dropping like a rock. This year, right now, rates have leveled off. So the lack of volatility has allowed borrowers to adapt to today's higher mortgage rate environment. And so you might be wondering why this is happening. Well, it's primarily due to two factors: the higher mortgage rates and the lower availability of homes. Mortgage rates have been hovering around 7% since mid-May. On top of that, there are 37% fewer homes on the market today than there were last year at this time. And this combination has resulted in today's demand being the lowest we've seen in July since tracking began in 2012. So what can we expect moving forward? The situation is not likely to change until we see a drop in mortgage rates, and that's not likely to happen until the market cools further. When that occurs, rates will ease and demand will rise. If you're thinking about buying or selling a home in Riverside County, you want to pay attention to the expected market time. Understanding this metric allows us to make strategic decisions and better navigate the real estate landscape. With demand falling and supply unchanged, the expected market time increased from 56 days to 57 days in the past couple weeks. However, it's important to note that last year, the expected market time was 76 days and cooling rapidly. The 3-year average prior to COVID was 86 days, a much slower market than what we're currently experiencing. Home prices generally follow a seasonal trend. We typically see higher prices in the spring and summer months and lower prices in the fall and winter months. What's interesting is sales prices in Riverside County have seen an increase in home prices every single month since the start of the year, and that's astonishing considering how often home prices fluctuate. The median sale price for a home in Riverside County is now $601,000. This means that the median price has increased 4.3% since the start of the year, and we're now just 1.5% below the all-time median high of $611,000 set last June. Currently, we're seeing the highest interest rates that we've seen in years, with the 30-year interest rate currently at 7.04%. It's no surprise with rates this high, homes become less affordable, and we've certainly seen that over the course of the last year. In fact, mortgage rates have been steadily climbing since May 5th, and they crossed the 7% mark in June. The Federal Reserve has said that they're near the end of their tightening cycle, and they plan to switch gears soon. So when that happens, the economy cools further, the Fed will begin to lower interest rates, and a few things are likely to happen. Homes will become more affordable, and we can expect demand to rise again. This will be great news for buyers who've been eyeing the market from the sidelines, but were put off by the higher interest rates. Also, homeowners that have been hunkering down with their low fixed mortgage rates will be more willing to move because they'll be able to get a better deal on a mortgage, and this will add to the supply on the market, which will help balance demand and prices. It's a pivotal moment in the Riverside County housing market. So what do you guys think? Will strained affordability cause home prices to drift lower, or will a scarcity of available homes for sale drive prices higher? We'd love to hear your thoughts and insights in the comments section below. Join us for upcoming episodes as we delve deeper into these dynamics and uncover the future of the Riverside County housing market. Don't forget to subscribe to our channel for more real estate updates like these. Thanks for watching. We'll see you in the next video.